Hello, everyone. I hope that you had a wonderful weekend and happy Father's Day to all the fathers. Right. This week, in my opinion, seems to be one of, how do I say, it will offer, analytic pleasure to, the analysts out here, those that wish to become more skillful, in that aspect, right? Those that, deserve a challenge. This week, we'll give that to you. So as you guys can see, right, we're going straight into it. As you guys can see, Monday 8:30 a.m. we have news. So we have engineered volatility being injected into the market at New York tomorrow morning, right? So I won't give much information on this until we look at the charts to the fact that we are at a critical point in the market at the moment, right? Tuesday, you can see that we also have news events, right? Within the New York session, but that day, which is Tuesday, comes before a bank holiday, and that's what makes this week tricky, right? We have a bank holiday right in the center of the week, right? Wednesday, where we have 2 days in front of Wednesdays and 2 days before Wednesday. And, that is something else that, we will be discussing, right, this week. And it will, be applicable to the weeks in which, we have this, this blank week within the monthly cycle that just doesn't seem to fit anywhere. We'll be talking about that as well very soon. Thursday, we have unemployment claims. And then Friday, we have news events at 9:45 a.m. So something to, always take into consideration is that whenever you have, news between 9:30 and 10:30 a.m. in the market, or more specifically, 9 to 10:30 in the morning, right? That time is very, good for day traders or scalpers, right? So due to the fact that on Friday we have that, these types of events, and pay attention to the names of these events right here, right? These types of events usually yield high probability market conditions. And if you look, you don't really need to, pay attention to the manufacturing or the services. Once there's flash, you have flash PMI, whatever it is. It could be flash manufacturing PMI, flash services PMI, whatever it is, right? Once there's flash and PMI at the end, and due to the fact that we had, a day which, we don't pay attention to, which is the bank holiday, on Wednesday, Friday would be our best bet, because before Wednesday and after Wednesday, price will not, give us the type of moves that we would want to see. If someone said resolution looks bad, I kind of see that it looks bad. I have no idea why it does, but hopefully after we finish this, it will, look a lot better. There is no option for me to, select the type of resolution that you guys could receive. I literally have the fastest Wi-Fi in the country right now, so yeah, more than likely afterwards the visual, quality should be better. Anyways, and we've talked about this right now. Which day of the week could we have, a major reversal, or, the major reversal? Because during the week, and this is very important, right? There are usually two reversals, right? For example, and we will look into that when we, go over to our charts. The first reversal last week was when? On Wednesday. And when was the second one? On Friday. If you realize there was a leap over Thursday, and that's what usually happens whenever we have, reversals in the week. And those reversals are always, not usually, always. And there's not a time when you can look in your chart and not see this. It's always there. Those reversals are usually caused by, well, always caused by our main tool of, seeking a directional bias, which is what? Sequential SMT with, and this makes it more high probability, the precision swing point. So this right here, which I am saying, right, you need to be writing this down. Whenever I give information like this that I am giving right now, right, it's usually followed, or by me just rambling, talking a bit, right, of important information, but this is the real thing right now. So as you guys know, right, for the 90-minute cycles, we use the 5-minute time frame. For the daily cycle, which is comprised of the sessions, we use the 15-minute time frame. And for the weekly cycle, which is comprised of days, we use the 1-hour time frame, and etc., etc. As we go up, we use the 4-hour time frame for the monthly cycle, and you already know what that is. The precision swing point, right, that you need to be using, and anything else that I've said before, anything else that you heard before, anything else that you believe, anything else that you've observed, anything else that you think, just cast it away for a moment, right? A 15-minute precision swing point will be, the most deciding factor when it comes to reversals when you're studying the daily cycle, right? So more times than not, right? It's not always there, but when it's there, it's very high probability, right? So if, for example, you're trading the daily cycle, London makes a high, which, was caused by sequential SMT. So you're looking at the Euro USD, right? London, during London, the Euro makes a high, takes out the Asia session, GBP USD failed to do so. And there's a formation of a 15-minute precision swing point. Price will usually immediately just fall, right? And remember that you are using, risk management. So you're studying risk management, you have your plan, and you're just trading your plan. There is no reason for you to not be making money. There's no reason for you to not be passing, funded accounts and, running them dry, right? When you have this information. You understand? And this is the same thing, that we see happening right here. But here on the screen right now, we have the Euro and the Great British Pound, right? These are what I would consider the important, dual relationship of the Forex market, right? Euro and the Great British Pound. And this is due to the fact that the Euro and the Great British Pound, they are, amazing to trade. They are easy to read, which, if you guys realize that, we've been on the Euro and the Great British Pound for some time right now. So looking here, we're going to be discussing, a model, which is what? What is it? It's fractal. Here, we're looking at the chart right now. You can see in the corners of, the left corners of each chart, this is the 4-hour time frame. The 4-hour time frame relates, and it is specifically, it's pegged to the monthly cycle, which is what those rectangles, colored rectangles at the bottom of the chart, are delineated, right? So each rectangle, as you guys know, it represents one entire week of data. Here, right, this is the Euro USD. You can see that here we failed to break above this high. After, when we fail to break above this high, the candle, which, gave rise to that failure, caused us failure, is a precision swing point right here. Right. Here you can see that, this candle is a down close candle and this candle is a up close candle. It's very important to always note the broker, right? Because the types of precision swing points, right, the high probability precision swing points will be, reflected upon, similar brokers within, the asset classes which you're comparing. For example, this was Awanda, and this is Awanda. You would like to see a precision swing point there, but you wouldn't look for a precision swing point between Awanda and, FXCM's data, right? Anyways, right. So first of all, we want to know why, price seek this low right here, looking at the euro. And, I always have to remind you guys of this, or I just feel the need that I have to remind you guys of this. And it's never about me gloating. It's never about me, pumping my chest or anything like that. But we talked about this before it happened. And again, yes, I know, but some of you guys might, have been at work, or you didn't watch all of the live stream, or you didn't pay attention. But if you go back and watch, you would realize, and I usually do this within the first 10 minutes of the video, right? Whenever I'm pretty not sure of something, but when you expect something to happen, right? And it's very clear. I say the liquidity is here. We expect price to go here, and that's what it is. And the reason why I do it like that is because I do not want to, even though in myself I'm usually, confident, right? I don't want to just push that, because that is what I would say, bad trait, right? I am usually overconfident, and well, I don't know if it's a bad trait, but yeah, just overconfident. But I try not to push that on, you guys, due to the fact that you're new to this information, which I've had for, years, right? So here you can see that we failed to break above the first week of the month's high, which is what caused the sequential SMT. It was also in intermarket sequential SMT, but right now we're just focusing on these two, because even though it's higher probability when you have intermarket sequential SMT, is this is the base of everything, right? And so it's very important to understand this, right? And if you're a person that you go to work, or you don't have a lot of time on your hands, but you want to trade, or if you're someone that's patient and you can wait for those monthly one-shot, one kills, whereas you will get in near to the high of the month, right? And you will get in when there is time for volatility to enter the marketplace, right? Which is times such as this. So whenever we have a monthly, sequential SMT, which occurs between the monthly quarters, right, and is caused by a precision swing point. So this gives rise to all of this expansion, or dropping of price. And we'll look here at the British pound right before we continue. So if you guys remember, right, while price was literally here, right around here at this high, we expected price to what? Draw to these lows. And there's a reason why we expected price to draw to these lows. And why is that? Due to the fact that, the magneto effect was what? Was present. Yes, it was present. Also, what else was present? Here, before we had price, run above this high. What else was present here? This right here, this candle right here, and I'll use the crosshairs, right? This is a precision swing point. Look at the euro, the chart to the left, if you've zoned out or anything. Hopefully it's not boring, right? Here you can see that candle is a precision swing point, right? And you can see on the Great British Pound it's a precision swing point as well, right? So the candle here is a up close candle, looking at the euro, but for the Great British Pound, it's a down close candle, right? Here again, and this makes it even higher probability, right? Here again, you can see that we also have another precision swing point, but it's a sequence, right? What's the sequence, Dave? What's the sequence? Here, this precision swing point right here is similar. Well, it's not what do I say similar? It is the same, type of closure, such as this one. The exact same. This is down closed. This is down closed. Here we have a up closed candle. Here we have a up closed candle. Whenever you have, sequences such as this, right? And if you realize this precision swing point with this, which is, we're looking at the forward time frame, it formed the day after this, right? So here we had a lot of volatility push price up, and the volatility had, the volume which pushed price up, which was engineered into the marketplace, had to be, returned to. So there was a lot of sell stops below this low, and that's something that you will recognize, this low as well, right? And this is not a coincidence that we had, CPI push price, because for price to get to the volatility, what am I saying? The liquidity below these lows right here, we need a immense amount of liquidity to push price down. So we need more liquidity than was given here or engineered into the market here to push price here. And that's what happens whenever you have a sequential SMT which overrides a lower time frame sequential SMT. So this right here was sequential SMT, right? And remember, guys, what I always say for CPI, right? The CPI trading model. How to know where CPI will go? The day before CPI, right? Whether it is Tuesday or Wednesday, it's more than likely, it's like more times 50% Tuesday or Wednesday, but it's always in the second week of the month, right? So here we had sequential SMT between the days of the week, right? So between Monday and Tuesday, here we had Tuesday take Monday's low, price rallied, failed to break above this high, precision swing point, price fell, right? Price will return to these lows due to the fact that this is a higher time frame sequential SMT. You understand? Cool. I'm pretty sure that you do. Right? So price will return to this low. And once this precision swing point forms, price is immediately in what? It immediately, stamps this point or this level as extreme premium. As you guys realize, we do not, depend on, PDRAs. The only P areas are, we depend on our old highs, right? What's old highs? Price runs about this high. There's a tracking correlation. Precision swing trend forms. A gap, forms below the low. And there is a lower time frame sequential SMT here for price to be drawn to. So that's the real liquidity pool. Right? This right here, that's the real liquidity pool. This here, this is the real liquidity pool. Why? It's a lower time frame sequential SMT. And this is something that I've talked about before, but just have to let you guys know that, right? Here, where we have this lower time frame sequential SMT, it will always be trumped by the higher time frame. So it doesn't matter if you're looking at a yearly sequential SMT, but price is rallying from a monthly, that will be trumped. If you're looking at a weekly cycle sequential SMT, and such as this, you have sequential SMT here, these lows, price rallies, and then there's a higher time frame sequential SMT, then price will usually fall. Right? There are certain sequences which price will follow, and and there are certain sequences that it won't stretch further than that. So, for example, when you have a higher time frame sequence SMT, right, price can sometimes skip a cycle. So here, such as here, right here we had the monthly cycle sequence SMT. Price can skip the daily cycle sequential SMT, but the weekly cycle sequential SMT, and drop to the daily cycle. So, for sequential SMT, there can be, right, well, at all times, you have the first you have the, where is this? Second, and you have the third. So these right here represent, whichever cycles you're looking at. So the first cycle, right, right here, where, gotta say this again, this is not hindsight. For anyone that hasn't been here for like 2 weeks, we still have the membership. But I know there's some of you guys like that. I mean, you guys are the same ones that are complaining. Like, a couple of you. You're like, you come here, you watch it, like, just watch it one episode, you skip 5, then you watch, then you're like, I don't understand this. Of course you don't. How can you? You won't understand. You must study. You must be here. You must be here, but, watching when, I say this is going to happen, then you see it happen. Like, that's how you learn. That's how it get programmed into your brain. You're like, this is real, it works. Then that's when you start having faith in it, right? So this right here represents the first cycle, right? Second cycle, third cycle. So the first can be any cycle, right? But the first, it's like basically reversed, which is kind of weird. So, for example, here we have the first cycle being the monthly cycle, right? The second would be what? Because we're going down. The second would be the weekly cycle. I was actually planning on talking about this, Wednesday. Oh, you're here. I'm really excited because it's amazing. And the third would be the daily cycle. Where are you going to stay? Patience, my friends. So price can reflect upon the monthly cycle during the weekly cycle, or it can reflect upon the monthly cycle during the daily cycle. But it should not go further than that. That's a terrible drawing. I need to do this again. Right? It cannot go further than that. Anything further than this is low probability. Right? So this saves you guys a lot of time, stress, all of that. So the monthly cycle right here, this is the monthly cycle that we call the sequence SMT. What would trigger this reversal? What will be a high probability play right here? If there was in the second stage, or the second cycle, the weekly cycle, if there was sequential SMT here, then that would also cause price to go down. But here we had what? We had the third cycle, in the sequence, being the daily cycle. So we had sequential SMT literally, here between, and we'll look at that right now. So we have, and for this, we have to skip the 1 hour time frame, jump to the 15-minute time frame, right? Right here. Daily quarters. Daily quarters. So as you guys can see, right here, this level of price action, this high failed to break above this one. And this was what? This was the New York session, and it failed to trade above the London session, right? And here we had what? Price wicking above the London session into this fair value gap. Then we had price just breaking lower. So here we had sequential SMT right here between the London session and the New York session. After what? Sequential SMT within the monthly cycle. So we skipped the weekly cycle, right? So we went from monthly cycle sequential SMT to daily cycle sequential SMT, and that gave a lot of volatility due to the fact that we skipped the weekly cycle. Here you can see that this did not close above this candle, and this did not close above this candle. Whenever you have, for example, you have monthly cycle sequential SMT, then daily cycle sequential SMT, you don't need to close, right? For monthly cycle sequential SMT followed by weekly cycle sequential SMT, you look for a close. Here, right? And remember that we already had a 4-hour precision swing point, right? We had a 4-hour precision swing point. That was a telltale sign of, a reversal. Then here we just had price right above this high, then it ran above this high, right? Obviously, you would not need to, sell, right here. You could literally just wait for example, a gap to open up, and then you just trade in the direction of the order flow. Another thing to understand is that price will not reverse unless there is a cracking correlation, right? That's very important to understand. It's not going to reverse unless there's a cracking correlation. Also, we have intermarket sequential SMT here. You can look at the RRT, which is the interest rate triads. You can look at the Forex, not the Forex, the index futures chart as well. And you will see a lot of interesting, you know, things that we will, be talking about. I'm just giving you guys, some time to check, for yourself. It's not fun to just be given everything just like that, and then at most times too much information, right? Right, it's too much information. So here also, what do we have? We had, this gap right here. So even if you didn't trust this, and then we had this candle right here, right? We had this candle right here, which is a precision swing point, right? So that's a up close candle for a. Do you realize how precision swing points are everywhere? Wherever we have major reversals, it's there. So it's there whenever it's high probability, right? So this right here, that's a precision swing point. I don't label it for my own reasons, right? So this right here is a precision swing point, right? And you can see that this is a down close candle. This is an up close candle for the euro. But what makes this more important is not just the precision swing point. Is that after the fact that we had everything else here, so this would be the last time for you to enter right here, right? We had the multi-cycle sequential SMT. We have the 4-hour time frame precision swing point, which is specifically bonded to the monthly cycle. What else did we have? We had daily cycle sequential SMT. Then now what do we have? Another precision swing point. And remember what I said about the daily cycle. I remember I talked about this before. The 15-minute time frame precision swing point is specifically made for designed for what? The daily cycle. So we have this precision swing point here, right? Precision swing point here, and this is a precision swing point, yes. But this right here, this is not a swing point day. This is not a swing point. This is a precision candle. So this is another new term that you'll learn, right? This is a precision swing point where you have one candle to the left, lower, and one candle to the right, lower than the one in the middle. This is a gem. I don't like saying that because then people just take it and post it everywhere, but it's okay. So here, right here, you have what? Listen, no one can see this. And remember, this is 15-minute time frame. This is specifically made for the daily cycle. So you gotta be looking at the daily cycle for this to make sense, for this to work. They have this right here, which is just a precision candle, right? That's a precision candle. This candle is lower than this one, and it's higher than this one. So it's not a swing point. It's not a swing point. What does that mean? It's not a swing point. So literally here, if you don't realize what I'm trying to say right now, this is another type of cracking correlation. This single candle right here, which gives rise to what? High probability fair value gaps. So here, you can see that, and look what you can see. Yes, it's making a change in the state of delivery. This is a gap right here. I'll make it brighter for some of you. And you guys, we already talked about this if you guys remember. Right. Here we have this gap. This gap was filled. And pay attention to this. Right? This gap was filled. Right here. This here, even though it's a little bit, it's an up close candle, not a precision swing point. Here we have this candle already breaking below this low, right? In the euro, but we had price, this was an SMT fill right here, right after we had a precision candle form on the Great British Pound and the precision swing point form on the euro USD. So even right here, there are many other things, just as I just pointed out the precision swing point, which is, Basically, this is what it is. You have one candle here. This is a swing point. Pay attention, right? You have one candle there. You have one here. Yeah, you know this already, but you don't know where I'm getting to. That's a precision. When you have, this candle right here in the middle being, a different closure, looking at closely correlated asset classes within your chart, right? So, for example, this one is, what do I say? If this is up close in the middle and the other one is down close, it's a precision swing point. But this is even more high probability. Here we have what? And this is for, those of you that, you see the wicks and you're like, it's not a closure, you're scared that and you see this, that's your goal. Remember. And another thing, no one talks about this. No one talks about it. No one understands it. You even give it to them, they won't believe it. They will be like, no, it's nonsense. And remember, it's time specific, right? Literally time specific. That's what it is. Right? So here we have what? This is another cracking correlation. Why? This right here is not a precision swing point, but this is. So we have a precision swing point, here, but this is a precision candle. Do you understand? This is a precision swing point. This is a precision candle, right? This is a up closed. This is a down closed. After which it gives rise to, and even if you didn't trust this, wait for what? The SMT fill. Okay, so you see price trading into this gap right here. And right here, I could even connect both of these gaps. Doesn't make a difference, right? It's still one gap, right? There are no wicks here that separated, still a gap. If you look at if you look at a different time frame, you'll still see a gap. So price traded into this gap. It did not trade into this one. This is where, you'll get in if you're scared. You could even get in right after you see the cracking correlation between the precision swing point and precision candle form. So as you guys can see, this is not ICT. Nothing like ICT. This is miles ahead of what he talks about. You see, he preaches about looking at this level and that level and kill zones light. You don't need to look anywhere outside of your chart. You don't need seasonal tendencies. You don't need anything like that. Week after week, we consistently do this. Right? And I really don't like to talk about it. I remember in the first times when, what did I usually do? What did I usually do, man? I usually, every time I'm right or correct about something, I just snip it, post it, and then after 5 consistent weeks of doing that, I'm like, no, I'm tired and just not going to do that anymore. Right? So another thing is that, I would like to see Monday's range, which is tomorrow, farm before, deciding to do anything. Right? So personally for me, I'm just waiting for Monday's range to form. Where you don't want to expect something, I tell you. I don't like to, participate in low market, conditions, low probability market conditions. Right? That's something that I hate. I'm not going to do that. And another thing, right? Realize, right? When some people are like, these are wicks, right? This is the way that you confirm that, this is a actual precision, not precision support, an actual sequential SMT are not dependent that, on the wicks. Of course, you could reverse these right here, as you could have, the critical correlation between the precision swing point and the precision candle, could happen here, whereas there's no sequential SMT or anything, but you need a hair time for sequential SMT, and that's something else I will talk about. Whereas you could skip from first to fourth, just as you skip from the one-way cycle to the daily cycle. There are times when you can skip from the one-way cycle to the 90-minute cycles using this. I hope that you found something valuable in this right here. Been talking for a while. It's a lot of sauce. I don't know if it's too much, because of course there's more, but just consistently week after week, giving new ideas, things to ponder upon. I don't want to make anyone really, really, really too confused. But that's what you pay for. Unrivaled knowledge, second to none, things that are not in books, things that no one else talked about on this planet. No one else knows about. Real information, raw information that works, that's there. What's the main cause of everything that moves? What's the main cause of price reversals? What's the main cause of expansions? Why is there always sequential SMT everywhere? Why is there always this cracking correlation everywhere? Because that's when the market decides to turn around. If there's no cracking correlation, it's just going to be going in a straight line. So right here at the top market, looking at the S&P 500, looking at the NASDAQ, right? We have liquidity here. And look at this again, right? It's amazing, to be honest. What's this candle right here? Let's take her across here out. What is it? Oh my gosh, it's precision swing point. There's no one else talked about. No one else. No one. Like literally, like, they say there's nothing new under the sun. This is new. This is new. Yes, it is. Right. So here you can see that we have, these highs right here. Draw liquidity, S&P 500. Right. Like, personally, like, I can't see these highs and just dismiss them. It's impossible. I just see them, my eyes glued to them, like, oh yeah, I'm not gonna be short right here. That's crazy. Nope. What would cause, price to reverse? You already know. Sequential SMT, precision swing point above the true week open, which is not even established yet, right? And that's what would cause it. That's what would cause a reversal. There's a pending reversal for this stock market. And, there will be a time when the price will, literally crash so low that, it'll be insane for anyone that's, holding something. Like, if you have a good amount of cash, you really need a good amount of cash, $10,000, fine. You can make some money to, build, with, buying assets at a low cost. Right. So basically, that's what it is. High highs and, these highs right here, just a cracking correlation right here. At these lows, there's a precision swing point, which makes this one right here, which seems to be a cracking correlation. If you look at this, it barely traded above this high, man. Barely. That's not significant, right? And also, this doesn't matter as yet unless there is a high impact news event underway and we have market, precision tools, to use for such as a weekly cycle sequential SMT or a weekly cycles through open to depend upon, because that's very necessary, right? But of course there's a pending reversal, but for now you see price drift higher for just a short period of time. So yes, for now, due to the fact that the DAO is just unusable garbage, right? We're just looking at we're looking at the duals, right? The major ones of that. Right here we have the S&P 500, we have the Nasdaq right here. And of course, we reflect upon this more whenever we get more information. Here we have Bitcoin to the left, and we have Ethereum to the right. So something to keep in mind is that we have sequential SMT here between the quadrennial cycles, right? And whenever you have sequential SMT, but during a lower time frame cycles, you have consolidation. That is a telltale sign of a large move that is to come. So just keep your eyes on this. Even if it consolidates more, we don't have a problem with that. Personally, I am not interested in buying crypto unless it crashes. Right? Mostly, most of the buys we got in at 2020, we're out of already, which makes no sense to be holding much more. Makes no sense to be buying right now. If you buy right now, for you to get 2x, while not gambling, price needs to literally go up 100%, which makes no sense. But here we have accumulation of some sort, which I believe will be sell orders, right? We're just going to be having price play within this range, could be above this high, below this low, until the other direction for price reverse is confirmed, right? Before we go, how is the sequence in T when 2023 high both got taken? This is it's between the quadrennial cycle. The quadrennial cycle is comprised of 4 years. Oh, no, it's comprised of 4 years. So it's like literally 4 years and 4 years and 4 years and 4 years. Right. So, but that's something else that is not really important right now, which we will talk about eventually. All you guys gotta know is it's a lot of sell-side liquidity here. I cannot dismiss this. Look at and then right here you can see that there was SMT right here, which was of a lower time frame cycle. There was a SMT here, which was a lower time frame cycle as well. Right, but this right here is like the information needed to reflect on right here is just not. We don't have enough time for today, so we'll go over it another time. So yes, hopefully you had a blast with this one. Very talkative. It was very long, and we'll be back Wednesday at 6 p.m. Eastern Standard Time. Right? 6 p.m. Eastern Standard Time. You need to be focused on okay, they talk about wow, so there's cycles that are comprised of 4 years. Yes, there are. There are even 16 years too. Cycles, but that doesn't matter right now because right, those cycles are usually by me used for seeing for example how the presidential elections will behave before the fact, and just seeing events, for example, when you have those really really high cycles, right? But the lower cycles, such as the yearly cycle, the monthly cycles, weekly cycle, daily cycle, mostly the weekly, monthly, and the daily cycle, those are, what you should be focusing on. Because you're trying to make money, you're not trying to tell the future yet. Uh, You know, it's not possible to do so. It's funny. But yeah, right now you just want to, know what price is going to do, right? You want to like rate the funded, one of those places. What are they calling them? For prop firms or whatever. Take 100K from them, take it, invest it in something. Don't pay in a house or something. Like just, make money, right? Because whenever you make money in the markets, you want to take it out and do something, tangible with it because money isn't real. Let's be honest, it's not real. It's not. Right? It's just paper. The time when you get something is when you buy something that's physical. That's when the money becomes value. It doesn't matter if it's like, oh, it's depreciating. No, you have something to show for, you know, this image, this illusion, which they call money. So, no, the Telegram account is not going to disappear tomorrow. It will be here as long as WAP is given problems. So, we'll still be here. We'll still be on WAP. We'll be, posting on the both of them. And we'll post this to WAP within 30 minutes. So, it'll be there for you guys to watch again. Right? Hopefully you found value in this, which I'm pretty sure that most of you did. And again, happy Father's Day to everyone. And, well, all the guys, all the fathers. We'll talk again Wednesday at 6 p.m. Eastern Standard Time. Goodbye.